Good afternoon. This is Trey Knippa for NakedTrader.com on the floor of the Merc in Chicago. This morning I was a guest with Stuart Varney on Fox Business News, and what he asked me clearly was a leading question given the network that I was on, but he was asking me about, do crude prices and do an increase in gas prices, is that going to slow our economy down? Now, never mind the fact that our stock market's up big today with getting leadership from exactly where it's supposed to be coming from, which is the NASDAQ. So right now it certainly looks like our economic picture and equity prices want to keep moving higher. Oil prices have been kind of piggybacking on that. But let's go back to the topic at hand here on crude oil. Crude oil actually has sort of a chicken or the egg thing there in regards to price. So does an expanding economy, expanding global economy, does that make crude oil prices go? Or does movements in crude oil prices actually affect the economy adversely on the far ends of the margin? So from that standpoint, I kind of want to talk about, well, first of all, why is these questions being raised? These questions being raised because as we are in an election year. And I think that Republicans and the Republican pundits really want to try to pin this issue on President Obama and make this a negative for his campaign. Obviously, what Obama is going to talk about is he's going to talk about the increasing job growth, things like that. I actually think that the job growth and the economic numbers that we're seeing, I think that our gains are going to be short-lived because part of the economic growth we're seeing is in the face of massive amounts of government debt. And massive amounts of government debt is a headwind for further growth. Why is that a headwind for further growth? And don't worry, I'll link this back into crude oil in a second. But why is that a headwind? Because all those dollars that are lent to the U.S. government in the form of debt, those are dollars that could be invested in new technologies. Those are dollars that could be invested in an increase in productivity, things like that. And if you go to the basic formula of GDP growth, in order to get a growth in GDP, you have to have an increase in population or you have to have an increase in productivity. The money that we're lending the government is dead money. It's plain and simple. So now, back into the crude oil. We're back into this cause and effect question. I think that the crude oil has an awful lot more to do with the Federal Reserve. Crude oil is a dollar-denominated commodity. Dollar-denominated commodities have been working up. The Fed has made it very vocal that they want to create inflation. The only problem is that when you try to create inflation, sometimes you create inflation in markets that you don't want to go up, and you don't create inflation in the markets that you do want to go up, and that is the issue facing the Fed as we move forward. This is Trey Knippa for NakedTrader.com on the floor of the Merc in Chicago.